Hi, this is James Shug with Westpac London's end of day report for Monday, June the 18th. Well, the market optimism that followed the election result in Greece, which saw the pro-austerity parties manage to form a government after the second elections held at the weekend, meaning that the unknown of an anti-austerity, anti-bailout government in Greece and the implications that might have ultimately for Greek participation, ongoing participation in the euro, meaning that that unknown has been avoided. Well, the optimism related to that didn't last very long. I mean, I think there was a view last week that the authorities, possibly the European Central Bank, the Fed, stood ready to put in place further stimulus if the election result had led to substantial market turmoil. As it happens, we got the election result that most people seem to have wanted, but that of course means that the prospect of that safety net stimulus is perhaps a little bit further removed than it would have otherwise been if we'd had a different election result. So markets initially, stock markets initially rallied on the news, but it's since turned back to despair, frankly. The Spanish bond market saw 10-year government yields there rise to 7.2%, which is an all-time high since membership of the euro, at least. That is totally unsustainable for the Spanish. The economy there is in recession. It's going to be in recession next year as well. The government will take on extra debt liabilities in exchange for the bailout that was agreed not so long ago for the Spanish banks, and that's all going to have to ultimately be financed, it seems, if they choose to use the 10-year part of the curve at greater than a 7% rate. And in an economy that's going backwards, that's just going to prove to be impossible. So that's where we stand at the moment. Greece is still an issue. There's still a lot to be determined there. There's been some noises out of Europe that maybe the insistence on austerity could be softened a little bit and the terms of the most recent bailout be renegotiated. Although Merkel in Germany is saying there is no leeway when it comes to the Greek situation. So no consensus really amongst European leaders on how to proceed in relation to Greece. And at the same time, as I say, the Spanish problem is boiling furiously away on the other side of the Mediterranean. There wasn't much data of note today. We did have in the US the latest National Association of Home Builders Housing Market Index. It rose from 28 to 29. It's a 5-year high in June, although May was revised down from 29 to 28. And it's still like 60% below the peak it was running at in 2005. I mean, the housing market has shown signs of improvement on various measures in the US, but the level of activity is still so low that it's really not making any contribution to the broader economy. Meanwhile, down in Mexico, we've got G20 leaders conducting their meeting and trying to pull together some sort of communique, which really won't mean much. I mean, really there's two people that can sort out this European mess, and that's Angela Merkel and Mario Draghi. It really doesn't matter what G20 leaders say and what commitments they make and so on. Ultimately, what needs to happen, if there's any chance of a solution to the European problem, is that there needs to be put in place substantial ongoing fiscal transfers from the wealthier northern part of Europe to the south, to enable those governments a bit more time to put in place the reforms they need to do so that their economies become more flexible and can actually operate efficiently within the strictures of a fixed currency, a single currency environment, where you don't have your own independent monetary policy or exchange rate flexibility. And the European Central Bank's role in that would be to help hold down bond yields by buying bonds of countries like Spain and Italy, and holding those bonds to maturity to keep those yields low and to give investors the confidence that if they were to lend to those governments, that they would be doing so, knowing that there's this backstop of support for the bond market from the ECB. Neither of those things have happened yet. They may yet happen, but things may need to get a lot worse before those sorts of policy initiatives will be embarked upon. Or maybe they won't be, and the Euro project will simply fall apart. That's the big debate that's really going on at the moment, the big uncertainty. And those of us that were very confident a year ago that the Euro would survive this episode, I think are now really concerned about what the future holds. So, on to markets today. In Europe, at the close, the London market's up just under 0.25%. The French market's down 0.7%. Don't forget French election results at the weekend too. Socialists there gaining a foothold. So President Hollande has even more support for his view of how things should operate. He's talking about cutting or lowering the pensionable age in France. I mean, that's just really not what you need to do to make your economy more flexible and more efficient and more competitive in an environment where you don't have, as I say, flexibility on your monetary policy and exchange rates. But that's the way that Hollande wants to go. The people seem to be supportive of that, and there's going to be more to and froing between the main European leaders, I think, on the best way forward for some time to come. Plenty of meetings this week. There's supposed to be a meeting between Merkel, Hollande, Spain's Rajoy and Italy's Monti, either Tuesday or Thursday. Mario Draghi may or may not be involved in that meeting. There's another summit next weekend, but all this talk and not much action really is not inspiring much confidence in markets. As I say, the French market down 0.7%, German market up 0.3%, the Spanish market down 3% today, and the Italian market down a similar amount. So Spain and Italy really being hit hard after the short-lived burst of optimism related to the Greek election result. US market, it's down 0.2% at the US lunchtime. 12,743 is the level of the Dow. Okay, on commodity markets, we've got a 1.5% decline in oil prices, $82.75 a barrel. Gold's unchanged at $1,629 an ounce, and copper's up slightly, up 0.1%. The Aussie dollar, it was trading above 1.01 against the US dollar. It's pulled back throughout the London afternoon. It's at 1.008 at the moment. So the weaker equity market environment, the risk-off attitude has hit the Aussie dollar somewhat too. We've got the Reserve Bank's minutes coming up in Australia today, Tuesday. That's the minutes to the June meeting, where of course rates were cut by a quarter. We might learn a bit more about the policy outlook there. Okay, that's it for now. So we're waiting for G20 communique. That's the next big international event, I suppose, that might offer some direction, but as I say, it probably won't make much difference.